Winston and Felix here, and welcome to this pre-market live stream on a day where a lot of media is sort of shouting panic. And I want to walk you through what's actually happening out there so that in the next few minutes after you watch sort of at least the first 10 minutes or so of this, you will understand where we're at, where we're going, particularly 6 key things I want to walk through. There is a death cross out there for the NASDAQ, for the S&P, for the Russell. What does it actually mean? Should we be afraid? And this is number 2, is an explosive rally possible? And number 3, what do you do when you are in like the worst sentiment in 30 years, which is happening right now, by the way? We look at number 4, very important. The biggest buyer of stocks out there is doing something that you're going to want to know about. You're going to want to take notes on that one. And then what are the machines doing? What are the algo funds doing? What are the computers doing? And then we're going to look at the charts of popular stocks like Palantir, Nvidia, Tesla, SoFi, Archer, and all the other ones you want to ask me about. And then number 7, we'll do a nice Q&A. And actually, there's one more bonus piece of information in there, which I forgot to mention, which is really, really key. So take notes, take screenshots, so you'll remember this, and it's not just sort of entertainment that goes over your head. Winston, of course, is taking notes for me, so we're good on that front. Let me share my screen with you. And actually, he was a bit miffed when I said that. You see that? He's curled up now. That's the guy who does all the research around here, by the way, in case you were wondering. So death cross for the NASDAQ. Is a rally possible, a big one? What do we do with the worst sentiment ever? And what's the biggest buyer doing out there? What are the machines even doing? You see, I'm making them machines. And then we do a proper chart review because that's really important. A lot of changes there, given all the madness that's happening in the real world. So we got to start with the death crosses, right? Yeah, that's why I write it down so I remember. All right, so what is a death cross? It's a thing you see banded about on social media quite a lot. Let me grab a little pen and I can illustrate a little bit better, like a yellow one here. So you see that yellow line there? That's the 50-day moving average. The purple line is the 150-day moving average. And this is what it's often we're using here is Trade Vision. If you want to follow along, grab yourself a free copy. There's a free trial for a week. And when the yellow line, the 50-day, crosses below the 150, that is generally known rather dramatically as the death cross. And it is an important thing. It's a bad thing. We saw on the day we gapped down, the next day we gapped down. So it is one of those things that destroys confidence, but it's a little bit old news. I don't know why everyone's picking up on this. This happened like 7 trading days ago. If you look on, that's also SPY. If you look on the IWM, for example, same story, except we had it in early March. If you look at QQQ, same story. We also have a death cross that happened here again on the 4th. So round and round we go. On the Magnificent 7, we also have a death cross here. So there's a lot of that kind of bearish sentiment out there with that. Is it important? It's just one indicator. We have actually recovered since. It's not good, but we all know it's not good. It's not like, oh my God, I'm surprised. You know, what? The market went down? Really? Nobody told me. It's not really happening out there. So I think it's a little bit like noise, and I'm seeing it a lot at the moment on social media. So be aware of it. For me, what would be more important is that we're trading above the 150-day moving average again. That would actually be way more useful. So that purple line there, we want to recover that and reclaim that, because at that point, these stocks become buyable again. And right now they're not. Much more important and much more accurate, I think, is the volatility index. It's the VIX, the fear index. Generally speaking, we want to be below 20, right? Above 20, I said panic. Obviously, I don't mean for you to panic, but that's sort of the indication. We're still at 30. We've come down a lot, which is good, right? Like a lot, but we're still trading at about 30 here this morning. So we'd like to drop into the 20s. No real consensus on whether that happens or not. A lot of people are just saying, by people, I mean sort of people I deal with on Wall Street, hedge funds and so on, they're saying, look, there's so much uncertainty out there, and Trump's creating that every 3 hours, that it'll stay really elevated. And others are saying it just can't last. Like the setup it's going to fall off pretty hard towards the end of this week. We'll see. We'll see. But as long as it's in the 30s, what do? We're more careful. So I'm nibbling a little bit, but I'm nibbling carefully. So I'm doing smaller positions, for example. And that's what I would recommend people do, is just be a little bit more cautious. Now, we also had just in, I thought I'd mention it, import prices just came in as Winston seems to be going off screen here. Winston, what are you doing? There he is. He doesn't look too worried about import prices, does he? Well, import prices just came in at minus 0.1. So hang on. I thought we have tariffs and it's going to make everything really expensive. Well, so far that's not happening. Now, of course, tariffs going to take a few weeks or months to trickle through, but it's a good thing. So that's kind of causing disinflation, if that's a word. Is that a word? I think that's a word. So that's what we had to start with, right? So I wouldn't be too worried about the death cross because you already know we're there. I would be much more focused on watching the VIX as an indicator, like, is the market returning to normal? Is the rally therefore going to be more long lasting? So right now I'm looking at short term, kind of okay. And I'm looking at longer term, well, actually medium term probably. I'm looking at, I'm a little bit worried about it because we don't really know how this is going to play out yet. Good morning, everybody. If you are, what did the polls say out here? Half. Half of you are worried about losing money. The other half are worried about missing the next big stock. It's interesting, isn't it? No real consensus on that one. So is an explosive rally possible? I saw a few of you guys in the chat here saying, hey, we can go up 10%. So one of the things I look at is like market positioning. And I don't mean you and me market positioning, I mean the big funds. So the big, long, short funds, the big funds out there, are they really bullish? Have they bought loads, or are they really, really cautious right now? And basically, we're at a super low level somewhere down here where we haven't been in at least more than 5 years. And it means they own very few shares, or they might be very short. So what happens if you get a bit of good news and you go up? Well, these guys are going to be chasing that rally like Winston chases a squirrel. You should see him. He gets very, very, very motivated when he chases a squirrel, don't you, Winston? Yes, there he is. So I would therefore say yes on good news. Say we get a big trade deal or a couple of big trade deals in, we could be in for the monster of all rallies. So would I be shorting this market? No. Why not? Too risky. Too uncertain, right? Bobby says every rally is being sold. Yeah, and that's what institutions do. That's what experienced investors do. They use rallies to sell out of positions, to reduce risk, because there's a lot of risk out there. There's a lot of uncertainty out there, but the medium and longer term, it's a smart thing to do, actually, but retail doesn't usually follow suit. Now, we also have, according to Bank of America, the worst sentiment in 30 years. Can you believe that? Terrible things happened in the last 30 years. We had COVID, we had 9/11, we had global financial crisis. I don't know what else we had in the last 30 years, but a lot of bad stuff happened in the last 30 years. Is it that bad? Is it really? Is the economy falling apart? Do we have massive bankruptcies? Like, not really, right? Just they're rejigging the tariff structure. So the way I look at that, and I'm actually putting out a video on that a little bit later on inflation and what the Fed is doing and so on. I'm looking at, they used the words, these are maximum tariffs right now, and they're using these to negotiate. This is the Trump style of negotiation. So therefore, these tariffs are going to come down. So if we've priced in the worst, it's likely going to get better. And again, it makes me feel optimistic because everybody else is bearish, right? Being a little bit of a contrarian can be quite useful. Now, this is a good one, and you're going to want to take a screenshot of this or notes of this. The biggest buyer of stocks out there is who? Anybody know? Anybody knows who's the biggest buyer of stocks out there? Winston, do you know? I think Winston probably knows, don't you think? He looks confident, I would say. Anybody know who the biggest buyer of stocks is out there? Put it in the chat. Scott, my friend, I know you're always paying attention. He knows. Yes, Scott, of course, is correct. Not me. It's companies themselves. So it's basically the stocks themselves. They do buybacks. They buy back their own shares. And we are in this blackout window. So just before earnings kick off, they're not allowed to buy their own shares. And it's sort of this slightly depressing sentiment on the market. And the open window to buy again, it's going to begin on the 25th of April. So 25th of April, they're going to be allowed to buy again. And that'll be about 30% of it. So typically they buy about, depends a bit on seasonality. It's about $1 trillion a year, isn't it? With the blackouts, it's probably 5-6 billion a year. So you're going to get about 2 billion a day in buying, and then that's going to ramp up to probably about 6 billion a day in just stock buying, which is, of course, is pretty useful, right? So we're going to go into a period that's going to give us a little bit more support from companies buying their own shares. And what about machines? Why do I keep writing machines? So the machines, the algo funds, the algos, the red pen is a bit menacing, isn't it? Let's use a blue one. They're going to buy, well, over the next week, if the market is flat, on the S&P, that is, they're going to buy 5 billion. If the market goes up, they're going to buy 7 billion on the S&P. If the market goes down, they're still going to buy 3 billion. So they're going to go and buy no matter what. And over the next month, flat market, they buy 11 billion. If the market goes up, they're going to buy 23 billion. If the market goes down, they're going to buy 8.5 billion. Is that useful for you? Is that information that would actually make you go, okay, interesting, we might be getting a little bit of a floor under this market, right? Which is why I'm short-term somewhat optimistic that we're not going to make lower lows. That's what I'm saying. So if that's useful to you, put a 1 in the chat, and I'll see that this is actually useful information for you. Winston seems to have entirely tuned out. There he is. He seems, oh no, he's awake. Winston, hey, Winston. Okay, he's just like, can we go and play with the ball now, please? So yeah, I'm seeing some ones rolling in there. I'm seeing that GME, actually that looked quite promising. I thought yesterday. So your question then, of course, is like, what are you going to buy, right? If the buybacks are there, the CTAs are there, maybe we're over the worst of the whole, the tariff and Trump thing, maybe not, who knows? How do you actually pick winning stocks right now? Actually, GME was actually on my list today, which was interesting. Well, you need to understand the rules, like following the news, following people on YouTube or Twitter or TikTok or wherever you get your news, isn't going to make you into a great investor. It just isn't. Unless you actually understand the rules, rather than just throwing darts at the board because you're buying whatever the latest thing is, it's going to be pretty tough for you to, avoid what people are saying in the poll here, avoid losing money, and you don't want to miss out on the next big stock. So my whole mission here is to actually teach you those rules. So if you wish to learn them, I'll put in the chat for you where you can learn them at felixprehn.org/get-free. I'll pin it to the chat as well. It's a 15-minute lesson. It'll teach you literally what 99.9% of people don't know. And you'll then go and you'll watch other YouTube videos and you go, they don't know it, do they? And it's a nice feeling. It's a nice feeling. It gives you confidence. It makes you sleep better at night. You know what you're doing. You know where you should be selling. You know where you might want to be buying. So felixprehn.org/get-free, check it out. Now, this is a bonus chart because so many of you put 1s in the chat there. And this is telling me what's coming next. This is from Bloomberg. It's the Financial Condition Index. And financial conditions are either loose, I know what you're thinking, it's not what that means, or they are tight. And what happens if they're tight? Well, the economy shrinks, right? It's hard to borrow. Money isn't so easy. So when conditions get tighter, what does it mean? It means the Fed is raising interest rates, possibly, but they're not, right? Yet they still have massively gotten tighter. We're at levels like we've last seen during the COVID crash. Very, very, very tight financial conditions. And it's got a lot to do with the bond market imploding and so on. And it means that the Fed should do something. And by do something, they have 2 ways that they can do something. One, they can cut rates, right? That's number 1. And 2, they can print money. They are basically the tools that the Fed has. They should be doing one of those 2. And they know it. Everybody knows it. Every fund manager, every hedge fund, everybody out there is talking about it. Bessent was talking about it yesterday, saying if the Fed doesn't do anything, we're going to do something, which means buying actually back their own debt to pump some liquidity in there. So I think we are going to get some of that. I think we are going to get some sort of form of stimulus for the market here, which of course is going to be tremendous. Do I know when? No, I don't. The Fed seems to be a little bit stubborn at the moment. Righty-ho. Alan says, I got onto the masterclass webpage a couple of days ago. Haven't signed up yet because I'm a low-tech kind of a guy. I'm not sure what the class would be like. Well, you're never going to find out, Alan, until you watch it, are you? Putting things off is the one route to what? Definitely not a success. If you're a procrastinator, you'll be procrastinating your own death or something. I don't know. It's just the most successful people in the world. What do? They see something, they find it interesting, they take action, they do it, then they decide whether they liked it or not, and then they take the next action, right? They don't go, oh, let me look at it tomorrow, let me look at it next week. And I'm not having a go at you, Alan. But if you can watch a YouTube video, you can watch the masterclass. It is no more complicated. It's pressing play on a video. Upside down there, my friend. Giving me some Thai baht, are you? Dodgy currency. I'm kidding. That's kind of you. Winston will get an extra tennis ball or something. Now, should we look at some of the procrastination is the thief of time? You see, you say it a little bit better than me, a little bit more eloquently than me. Love my hairstyle. Well, that's the effect of a lot of humidity and a workout today. And now, should we look at some of our most popular stocks? And I like that you guys are having a go at Alan in a positive and supportive way. That's exactly what we do around here. So pre-market, just flat, not a lot. Netflix is up. That's about it. Bank of America is up. What's that? KKR. Okay, it's a venture capital sharks, private equity sharks. Nvidia, you'd think they'd be somewhat up, given that Donald has just tweeted that he's going to fast track all their permits to build everything in the US and so on. But no, the market's taking a breather. The market's trying to figure out which way it wants to go. And that's kind of where we are right now, right? It's just sort of in that little bit no man's land where you want to be a little bit cautious and careful. So let me run quickly through some of the favorite tech stocks there, and then we can look at a few other things as well. Palantir is... Did you see that line I drew in yesterday? I said we need to close above 97.75. Did we? Nope. We actually hit our head there with sort of the resistance line. So we're still a little bit below that, but we're above the yellow 50-day moving average line there, which is still decent. It's up 0.5 percentage point this morning. SoFi is approaching its own death cross. Can you see that? The yellow line about to cross that purple line there. Not doing a lot today, just sort of hobbling sideways, really, 0.6% down. What else did we have on the list there? And NVDA. This is NVD. Oh, this is one of those crazy ETF thingies. Don't touch those. GME. I'll have a look at GME in a second. Yeah, gladly. NVIDIA is basically flat. 0.3% down, but it's still in that downtrend. You see the breakout here out of that blue line was not very meaningful, so not particularly good. GME, someone's throwing in there. Why was I interested in GME? Well, there is arguably a trend it's broken out of. Let me draw a line for you here. Something like that, right? That was the downtrend. You see that blue line there? That was the downtrend. Get rid of some of the other lines. We've broken through that. We've seen the 50-day moving average line peak up. We're above the 150 again. So this actually... Simon there, my friend, masterclass is short to the point, really enjoyed it. That's very kind for you. And JG is writing profanities and paying for them, which is very kind of you. A little absurd, but very kind, in a weird sort of way. I shall abuse you, but I shall throw money at you. Which is, well, it's $2. It wasn't, actually, not exactly generous, is it? By the way, I don't need your guys' money. That's not what this is about. So give it to a goat sanctuary near you or something like that. Although I appreciate the kind sentiment. So yeah, it's kind of an interesting one here. I'd like it to ideally take out that high there, but it's looking. If it just goes a little higher, it could be a nice little trade if you're in for that sort of thing. Of course, it's a highly risky thing, and most of you probably shouldn't touch that. Now, put some in the swear jar. Yes. I don't have a swear jar. Do I swear? I do occasionally swear. Yes, not that much. the Tourette's is manageable. Archer, downtrend, right? Can you see the downtrend? And what have you got? You've got a high, you've got a lower high, you've got a lower high, and right now we're still there. So we need to break through that downtrend meaningfully, take out that line, and then we get happy. So at the moment, we're not happy with Archer. And anything else? Anything else? Tesla? Consolidating, arguably, but it's down another % this morning. So there's a risk here that we might go through that uptrend there. Also, as we moved here a little bit up, volume is falling. So no real joy to be had out of Tesla there. Can you slide the screen down a bit so you can see the ticker? Hang on. Oh yes, good point. That's better, isn't it? Thanks very much for noticing that, Scott. That's helpful. Can you see the ticker now on the top? I think you can, at least from my preview. Should work. So, okay, let's look at some of the other things out there. What do we got there? Someone put VU in there. Okay, that's basically the S&P. So what do you see with the S&P? Well, you had we just go back in time a little bit here, right? So what do we have up here? We had a classic sort of consolidation session, but look at that. See that bit there? One low, lower low, lower low. That wasn't very good, right? That was sort of your early warning sign things were getting a bit skewish. Broke out then. We did it again, right? That sort of thing. One last high. And there wasn't really very much volume here. If you look at that zone there, and you look at the volume down there, there really wasn't very much. And then when we came down through the 50, through the 150, volume actually started to pick up down here. And that's not a good thing. So kind of classic textbook thing. Where we are right now, a little bit in no man's land. I arguably buying VU and you got a 10-year time horizon at discounts is a good thing to do. And it's a reasonable thing to do. So I wouldn't argue with it. But right now, it's not looking particularly promising, right? It's like, it's going up, volume is falling off, as in there are no real buyers out there. So everyone's a little bit cautious. So I'd be a little cautious here. Somebody putting out a Celsius there. Yeah, hasn't triggered yet my buy, which is, people like, someone put put a video out yesterday on Celsius, right? And someone wrote, oh, you're pumping the stock. I'm sure you're in it already. You're going to dump it. I'm like, bloody idiot, didn't even watch the video, did you? Because I said I will only buy it above 38.35. Did we close above 38.35? No. So some people really display their ignorance and stupidity in comments, which is why I block them. So the power of the little man. So we know not quite there yet. I have figured out, though, I'll share that with you guys in the community, how to set conditional orders on the closing price, which I thought was rather smart of me. If anybody wants to know that, let me know. And I'll record a lesson on that as I'm going to set up some more trades today. So yeah, it looks promising, but we're not seeing the breakout yet. Volume is also declining like most of the market. So I'm not doing anything with it. And I may or may not. It's completely up to that conditional order. Like either it gets triggered if the criteria are filled. If they're not, it's not, because I don't care what I make money with. It really doesn't matter whether it's Celsius or something else, right? There's some other stocks in that space too. Pepsi not looking particularly interesting, but what is it? Dr. Pepper looks also kind of interesting. How do you spell that? Pepper. What is it? D-O? What's the Dr. Pepper ticker? Does anybody know? Does anybody know? What's the Dr. Pepper ticker? Dr. Pepper. I hate that stuff, by the way. No? Doctor, I don't know what the ticker is. Someone will tell me in a moment, I'm sure. All right, let's have a look at Zim, for example, first. How are these dummies doubting integrity? Yeah, people come up with, some people are just angry and just frustrated with life or something. Someone ate their lunch or something, I don't know. And then they want to go and lash out at somebody, so they do it online, which is fun, right? It's thankfully very few. Most of you guys are very nice. Zim, yeah, not really screaming, buy me, please. That drop there, by the way, is a reflection of a massive dividend, right? So they paid a $3 dividend, which is why it went from 17 to 14. It's just sort of take the dividend out. But it's gapped down twice since, so it isn't there yet. And again, people said, oh, why did you say to buy this stock? Well, if you watched the bloody video, I said, I'm not buying it until it breaks out above a certain level, and I gave you the level. So, there we go. KDP, yeah, that's the one. KDP, how do you spell that? Pronounce that? Keurig? It's a weird name, isn't it? Dr. Pepper. It's a very weird taste. Anybody like Dr. Pepper on here? Let me know in the chat if you'd like Dr. Pepper. And then please leave. Just kidding. Yeah, I never understood why people like that stuff. So yeah, that's another one that looks pretty bullish. If you understand the rules, then you know what I'm talking about, because you've watched a masterclass and you'll understand the rules. And we got a nice sort of ziggity-zaggedy setup here, nice breakout there. We need to do it again. We need to go a little bit higher to take out these highs here, and then that could be an interesting one. But look, that's sloping up. Could do with a bit more volume, of course. But yeah, that looks like one of the few out there that I'm actually liking it right now. But again, I haven't bought it because it hasn't fulfilled the criteria yet. Dr. Pepper is terrible. Brilliant. Mark, you love it? Oh dear, Mark. I thought we'd get on. Felix never says what he buys, just biggest diggers. Really? Don't I? Interesting. There's a whole spreadsheet in the coaching community of things I'm looking to buy. Doesn't mean I'm gonna buy them because I set up a conditional order, conditional on it hitting a certain criteria, a certain price point. If it doesn't hit it, then don't buy it. It's very simple. It's not a oh, I fell in love with the stock thing, because that's usually what loses you a lot of money. Have you ever done WMT? No, we have not looked at Walmart yet. Yeah, nice little recovery there. What's the problem with this? Anybody know? Anybody know that's the problem with this? See that yellow 50-day moving average line there that I'm drawing an arrow on? It is going down, sloping down. So it's a little early still, I would argue. And you're going to want it to, because you're going to have some resistance from these highs. You're then going to get some resistance from these highs, and then you're going to get the resistance from the top there. So decent rally up though. Decent rally up on some pretty decent volume. So yeah, looking all right. What else we got there? MP. Oh yeah. That was actually popped up. If you guys are subscribed to Trade Vision and existing Trade Vision users, did you get a little notification? Did you get a little notification? There's something interesting happening. If you haven't yet, you're about to. There was a breakout or the software rather, called yesterday by MP Materials, which is one of those rare earth people. And yeah, that was a breakout here at, wherever that was, $27. And it's flying. And it kind of makes sense if you think this through, right? The US rare earths actually aren't very rare. It's just the Yanks haven't been digging them up lately. So you actually have a fair bit of it. You just need to dig it up. There are also quite a lot in places like Portugal and a few other places. You just need to actually dig them out of the ground. So we're going to do that. So MP here looking quite a nice little setup there. So that could be something worth paying attention to. Snobby Brits don't like Dr. Pepper. Well, the only problem with that statement is that I'm German, which is going to make the Brits, jump out of the window. Is it time? It is time to the market is now officially open, so we should have a look at what the damage is, shouldn't we? Let's have a quick look at the Nasdaq here, where it's opening 0.15% up, just about eking out a touch of green, not exactly a lot. We're still below that support at 464. The SPY is 0.12% up. Again, not exactly a party, but better than a drop. Let's have a look at fear, VIX index. And it's dropping 22%. It's at 30. We can go back to the 20s. I think that would make the market feel, 29.91. Yay. So we want red candles on the VIX, by the way. So yeah, close in the 20s would be very, very, very good for the market and everybody's kind of moods out there. It would tell us that things are, looking up and looking brighter and bushy-eyed. NVDA, which has confirmed they're going to build up to $500 billion worth of NVIDIA chips in the US, including Blackwell, which I didn't think was going to happen because Taiwan's had the sort of policy that they want to keep the latest chip technology in Taiwan. That has been their policy for as long as I can remember. And only the slightly older tech would be actually exported and be allowed to make manufactured outside. Now, does that make sense with the US, given that the US pays for the entire defense budget and buys most of the chips? I think the lever there was a pretty easy one to pull and go, all right, guys, how about we just cut off all funding? And then they said, oh, it's all right. You can build it in the US. It's fine. It's brilliant. We'll do it. We'll do it in 12 months. Yes. And that's what they're doing. So Trump saying he's going to speed up all permits required for that. And that's actually a big win. I must say, that's a very, very big win. We have not seen that level of advanced semiconductor manufacturing in the US like pretty much forever. So that's a good one there. And you would think that would be good for the whole kind of chip sector. Qualcomm is up 0.8%. What about the advanced money destroyer? Even that's up 1%. And no, it's still not the time to buy AMD. I've been saying that for months now. I know some people really, really want to destroy their money. I think I put the first video out on AMD around about October time, when you could have bought AMD at a gloriously overpriced $160. Now it's at $95. So am I going to get a Christmas card for that from anybody, perhaps? Scott, the CHIPS Act. The CHIPS Act was a terrible piece of legislation, basically saying, yeah, we're going to pay you money to build stuff here, but we're going to make it really hard for you to build stuff here, which is sort of weird. Good business doesn't actually need subsidies. It just needs to make it, you just need to make it easier for them to do stuff and give them an incentive to like build stuff there. So yeah, it's a bit like the Inflation Reduction Act, right? Those kind of things. It's just a huge waste of money, those things. Alrighty, let's have a look at anything else. Mu, okay, any other chip stocks that are related to this? Mu, Micron, they should also reasonably benefit from this, 1.8% up. Is that a time to buy it? No, I say. And no, absolutely not. It's still looking absolutely bloody awful. So I would stay the heck away from that one for now. What else we got? Palantir. Oh, yes, with that lovely little NATO contract that they got. They're basically running now all Western militaries. Basically a perpetual contract, really. It's up 1.7%. Didn't take out the high here at 97.75 roughly. A little higher, even 97, 98 maybe even. Didn't take that out, and that's kind of where the resistance sits. Smash that button. I appreciate you for that, my friend. Micron is a dog. It is. What about Oxy? Yeah, that's also one of those things. It's just chart-wise, it's a horror show. So the classic pattern, again, if you watch the masterclass down below, you'll understand what I'm talking about, because you'll actually learn the rules, is that sort of zigzag thing, right? And that zigzag thing can either, let me make that a little bit better. So you can either, okay, let's make this a little clearer, right? So that I'm not just ranting and raving, but I'm actually teaching you something. So connect the three most recent highs. Okay, I slightly failed on the first hurdle. That'll do. All right, that was your pattern. Connect the three most recent lows. Doesn't have to be like super precise, but you get the idea. So that's kind of your zone. And then what happens? Well, you have a choice. Either you shoot out of that zone to the top, in which case it becomes a buy signal, or you collapse through the bottom of that zone, in which case it's a put on the parachutes, folks. Please don't buy this signal. And where we are right now is down there. And we collapsed on some spectacularly strong volume. So I'd stay a heck away from Oxy right now. Even though Papa Buffett loves it and likes it and, it rolls and swims in it and so on. Yeah, okay, maybe if you got a 60-year time horizon, go nuts. Otherwise, I'd wait a little bit, because the problem is, if this thing recovers, there is a monstrous resistance zone up here where all the people who bought it here and thought that they were Buffett geniuses and been telling their wives, I'm a Buffett genius, and haven't mentioned the stock since. As soon as we go back into that zone, those guys are going to do what? They're going to sell, right? Because they don't want to keep that secret any longer. That's what's going to happen. So it looks pretty tough. What else we got here? Netflix. Netflix looked quite nice in green pre-market here. So what do you see? Are you starting to spot some of these patterns that we'll be looking at here? So nice breakout, nice rally up, right? So what should you have done? You should have set a stop loss up there somewhere and actually collected some money, because you could have done if you'd known what to do. And if you want to know what to do, please go and watch the masterclass, which is down below. And you would have, gotten in somewhere here, and you would have made 6-7% very, very, very easily. Now, the next thing that then happened is we came down, little rally up, and we collapsed on massive volume, right? Rallied back up, didn't make it high enough, collapsed again. And at the moment, we're hitting our head on a sloping down 50-day moving average line, which is that little yellow line there. So this is too soon to tell. That's what I would say. But if you just connect, may I have a line? If you connect these three highs here, you can see how important it is where we are right now. So we're trying to break through the yellow line, which is the 50-day moving average, which is sloping down, not a good sign, and that downward trend. So you got to break out of that. Now, earnings are coming up on the 17th. Rumor has it they've got pretty decent revenue growth, but who knows? So that's either going to make or break this trend. William says you get stop loss hunted. Yeah, it's a thing. You can avoid it very easily. They just don't set your stops at like a round number. So don't set it at 900. Set it at, 897 or something. That'll be much better. So if you take that as an excuse to not use any risk management, you're going to be much worse off it. So yeah, you just want to avoid the round numbers. What else have we got here? Can we find a single stock that's a buy now? There's always something. There's always something, my friend. I would generally speaking hunt around utilities, consumer staples. That's kind of where we're looking. Gold stocks. I think there's a lot of opportunity out there, but this is not financial advice. You gotta go do your own research on that one. But tech is the highest risk right now, which is why every tech chart we're looking at is like no, right? Scott, what are you putting in there? Energy fuels. Nice little recovery, but the problem is that the 50-day moving average line is falling like that, right? Like collapsing like that. So I'm not loving that. I'm not loving it. Do you want to short the market? I would not, because what if your elected president comes in tomorrow and says, we've got a deal with, I don't know, Canada and the Mexicans or something, then the market's going to rally. And then you'll be holding bags. So I would be very careful on shorting the market. Mining stocks. Yeah, there might be some in that space too. I mean, we looked at MP just. Yeah, that looks pretty good, doesn't it? That looks actually very good. So yeah, that's a beautiful little, that's a pretty long-term uptrend there, right? Really nice little long-term uptrend. And then you have that massive rally there, huge volume, everything's peaking up. So yeah, that looks pretty good. Now, you get to a point where you're quite extended above that 50-day moving average line, so you're a little bit late to the party. I would say the entry point was a little lower than that, right? Sort of around the 110 or so. We're 116. Not tremendous, just a little. But if it pulls back a little bit, I think that might be the entry point. I'd probably wait for the pullback personally. Celsius is down. Okay, no worries. We'll wait for it to break out. That's all we wait for, right? So actually, look at this one. This is a textbook freaking thing, right? So you get a breakout, We go sideways, sideways, we go higher, and then we zigzag our way along, beautifully bounce off the 150-day moving average line, do it again here. That's an absolute textbook beauty. I might have to steal this one, actually. And then we go higher, a little bit lower, but not as low as the 50. Even on the Trump thing, we did not go all the way back down to the 150. Now, massive rally up. Wonderful setup. Thanks very much for spotting that one, actually. That's a really nice one. I'm going to take a screenshot of that. We might use that for teaching purposes to just show what a chart should look like. So, Monica is trying to make me blush, probably successfully. Do you think Winston would love it? Let's have a look. Winston, would you love this stock, my friend? What do you think? What do you think? Is AEM a buy, Winston? Well, he's licking his lips. That's probably a good sign, isn't it? Take advice from golden retrievers. Red Cat Holdings. I remember doing a video on that a while back. Yeah. And this is, again, is a beautiful case study. If you want to see what a head and shoulder looks like, that's what a head and shoulder pattern looks like. So you get left shoulder, you get head, right shoulder, and then you get, let me get a line here. You get the armpits, the smelly armpits. Connect the smelly armpits with a straight line, the lows of them. And then what happens is when you break below that armpit line after the second shoulder and you go lower, that's a terribly bearish signal. And that was a terribly bearish signal. And we went down, another, from that point onwards, and then another 45%, right? So we're still in that conundrum. Now, is it improving? Yeah, it's improving. So there's a little bit of an upward trend here broadly, but we haven't managed to really break out of we're still below the 150 moving average line here, that purple line there. So it doesn't look beautiful, but again, learn the rules, then you don't need me anymore, and you can get those in the masterclass down below, Felix Prehn, get free. It'll take you 15 minutes. Seriously, if you've probably been watching me for 15 minutes, right? Average watch time is about 14 minutes right now. So you could have actually learned something, skills, rather than just hear my commentary on it, which would be much, much more useful. Knees and toes. Yeah, that's a good one. Bollinger Bands. Yeah, I'm not a huge fan. We actually do have them in here. I don't really use them, I must say. I don't really see a massive use case for them, to be honest with you. Much more important is the VIX. We keep watching that. We're down 2.2%. We are back in the 20s. We're at 28. Yay! That's good. We want to be below 20. But we're still, yeah, that's kind of where we want to go. So I think sort of 23 would be sort of my dream here in the next couple of days. Do you avoid trading stocks around earnings, says Broken Wing? Well, it adds an extra level and layer of risk. So you kind of want to be aware of that. Say if I have a position open, whether investment or trade, and it's pretty low to what I would consider the exit signal, then yeah, I might exit some or all of that in advance. If it's looking absolutely beautiful and perfect, then we also just let it run, because if you don't let your winners run, you don't really make much money. But I'd be careful. Like people buy call options or something just before earnings. That's really stupid, because it's you're overpaying and it's a 50-50, right? It's like you don't know what the outcome's going to be. So I would be more cautious around earnings for sure. Jim Cramer says stop losses are the dumbest. Seriously? Surely he hasn't actually said that. The guy was a hedge fund manager. Surely he wouldn't be that silly. How to set the stop loss amount? Linda, watch the masterclass down below. Felix Prehn /get free, and you'll get all the answers. All shall be revealed. It's completely free. Calls before dividend dates, short calls before dividend dates are a bad idea, very bad idea. You're very likely to get assigned, and then you have to pay the dividends. It's a really odd one. Let me me see what else is in here in the chat, my friends. So overall, markets are, I would say, consolidating slightly. VIX is falling very nicely here right now at 28.91. I personally think it's unlikely that we will go below that sort of floor we saw from April 7th. In the short term. That doesn't mean it's going to last forever, but right now it looks kind of decent. So we're nibbling at cautious levels, smaller sizes, and mostly just focusing on just getting better. Learn, improve your skills. So that's really what this is all about. Winston's all about skills, isn't he? There he is. He's all about skills. He's getting better and better at catching objects flying in the air. He's very happy when he does. I'd recommend you do the same thing with your time, is rather than watching the news or Netflix or something, just learn, because it's the most meaningful thing you can do. If you put skills between the ears, you will actually get much better outcomes for life, and you can teach it to people, and that's what the real impact is. So head over to felixprehn.org/get free if you haven't already watched it, and I know many of you watched it 2, 3, 4, 5, 6 times, which is cool. So you're getting value out of that, and I love you for tuning in. I love you for watching. Mel says, I've learned a lot. Brilliant. Amazing. John, appreciate you as well. Is there an app? I think that's a secret still, isn't it? But I think you Trade Vision users already know what the secret is. I look forward to seeing you live tomorrow. I'll put out a video a little bit later today. There's a big shift happening at the Fed. They've just laid out their 2 scenario plans for high tariffs and low tariffs and what they're going to do. And I think that's very, very important for investors to understand. So check that video out later on today. If you're not subscribed yet, you know what to do. But most importantly, please